1.7%. That's a nice recovery rally from yesterday. Mike Lee with us this morning. Look, Mike, we've got the rate increase from the Fed. We've got the statement that inflation is supposed to go down. Is this a time to buy?
I wouldn't. I'd be using days like this to take cyclical assets off the table. So tech, consumer discretionary, financials. Look, I think the Fed is going to overshoot in terms of raising rates to attack inflation because they can afford to overshoot. If they undershoot, so if they stop hiking or they cut too early and inflation comes back and they need to attack this problem again, think of all the systemic issues that'll cost. So whereas if they overshoot and we go into a recession, well, they can go ahead and they can cut rates very, very quickly. So look, I am not positive right here. We have contracting liquidity, slowing economy, earnings estimates are too high. Earnings estimates are for negative growth, and stocks are trading at 17, 18 times earnings. I mean, I do not think this is a good situation right now for stocks.
Surely we're not setting up for any significant decline, are we?
So, Stuart, look, I think the only way inflation stops is with the recession. And I think the Fed is going to keep bending and bending and bending until it breaks. And I think Silicon Valley Bank was a lapse on the part of the regulators and management. And I don't think, it could turn into a systemic issue, but we're not there yet. Until we're there, I think we get another 25 or 50 basis points from the Fed. I don't think we get rate cuts anywhere near in the time frame that the market's pricing them in. So, look, again, leading economic indicators down 11 months in a row. You always get a recession when something like that happens.
So are we back to the old chestnut in the fire, that is 3- and 6-month Treasury bills?
Yes, absolutely. I mean, you can be buying money markets paying 4.5%. You can be buying one-year treasuries close to 5%. Look, it's safe there, right? That you're not going to lose that money. That's a good return over the next 12 months.
Yeah, but meanwhile, I've missed out on some very nice rallies in cybersecurity stocks, in big tech stocks, NVIDIA. I missed out on all of that. I missed it.
Well, it depends. Look, it's very easy to sit back and hindsight's 2020, but I don't want to say that's gambling, but it's not that far off. I mean, look, the fundamentals are telling you that this is good. This is ugly. It's going to stay ugly. And yes, there are pockets of return here and there, but if you're looking for risk-adjusted returns, let's not roll the dice.
Yeah, let's not roll the dice, yeah. I've done it a few times and lost. Mike Lee, thank you, sir. See you again real soon. Lawrence back.
Thanks,
I want to talk about